So the volatilities never stop to amaze me. Just a few weeks ago, the market was hoping that Palantir is going to reach around $40 right before the entire market took a dump and forced us to rethink what is going to be ahead of us, before recovering most of the losses. As one of the market's most amazing comebacks after multiple sell-offs, Palantir has been keeping the market's hope to offer some safe haven for capital in the equity market. AI may not have saved mankind from itself just yet, but Palantir shareholders sure hope that their wallets can be saved by the hype. Hello everyone, hope that you had an amazing day and lots of profitable trades. In this video, we're going to talk about Palantir and to see if it can make you a lot of money. As we know, over the past few years, not everything has been great. Companies once considered as safe haven for gainful employment have been reducing their workforces, and it's been a traumatizing experience for those concerned. At the same time, the sharp rise in inflation has been grinding down people's savings in countries that have mostly known deflation in modern history. When the fabric of our own reality is about to be torn into pieces, we must seize that opportunity to start a new future for ourselves, by ourselves. One of the most important factors to improve our financial situation is to spot where the growth opportunities of tomorrow will be, and seize the ones that may multiply our capital exponentially, increasing the funds available for later investments. The market has been looking for the next big thing, and for many, they believe that Palantir is exactly what they need. Over the past few years, it became so much more than yet another tech startup begging for our money in exchange for promises. It became a major player in an actually promising sector, and it can tell us a lot about how the market appetite is measured up at the moment for risk exposure, and if the tidal wave is ready to rise all ships once again. The company has enough reputation, prestige, and technological expertise to arouse the market's curiosity as well as people's tendency to follow trends. It is a company that people would often view equally as the risk appetite of the market alongside others like Tesla or Nvidia. Palantir's reactivity to the macroeconomic tidal waves makes it a very interesting company to follow, to analyze, and to maybe buy. In this video, we're going to take a deep dive into Palantir and see whether it deserves to have a place in your portfolio. And before today's video continues, I just want to take a moment to thank you for coming to my channel and hope that you're going to enjoy your stay and to come back for more content. If you like what you see, please consider to like, subscribe, and to check out my channel for playlists of companies I cover. With that being said, I hope you're going to enjoy today's video, and let's get started. Over the past few weeks, Palantir has been able to recover back to around $28, reflecting a large amount of noise in the surrounding. The stock has definitely resumed its upward trend, aiming for the $30 to $35. In recent trading sessions, though, the market as a whole, I would say, took a dump, and the market went back to around $24 before rapidly recovering back to around the current level. So over the past few months, the news have been relatively light on the company specifically, but a lot of speculations of what's going to happen during the remainder of 2024. Between the upcoming elections, the mounting pressure from Wall Street to push the interest rates down, and the stock price action that has been able to hold itself above the $20 level. Like, can it go beyond that? Can it go above 30? Can it go above 40? And so on. A lot of people are looking to find a decent entry point to make a comeback to the more exciting parts of the market. And I would say that over the past few months, things have been boiling for change. Financial results that were supposed to send Palantir above 30, they had a lot less effect than what we thought it would, as people's attention have been focused on larger pictures of global economies dipping back into the red, with a large amount of uncertainties lying ahead of us. So because of the nature of its shareholder base, Palantir has always been a stock made of momentum and a large dose of anticipation, which will I wouldn't say always, but often bring us the self-fulfilling prophecy instead of cash flows and financial results. Because its actual financial results are decent, it could be enough to hold the line, but not to boost it above a certain level. We can see that its widening scope has grabbed the market's attention far more than anything else. So far, I would say that the resistance remains at around $25, above which the new goals to surpass are $30 and $40, with various degrees of support between $20 and $23, providing some stability to its price movements. The short-term trends of Palantir still appears to be bullish, with a pullback that is probably going to be recovered. The previous decrease in both interest and volume have not really changed the overall direction of the price trend, because that is guided by external factors as well. The overall trend stays bullish. The short term could be weakening, but it doesn't really change the bigger picture. So, as the market continues to go through uncertainties with the upcoming elections, interest rates, trade wars, real wars, and routes disturbances, these issues will continue to plague the global markets. The invisible hands of the global market are probably doing two things simultaneously. On one hand, seeking for additional safety. So that goes from international to national. And then the second one is to contemplate the possibility for risk exposure. So they're not fundamentally contradictory to each other, because even for the risk, we're not really talking about the risks that's going to fundamentally change the dynamic of the global markets. We're more talking about a relative dose of risk taking. So, for example, you want to go from savings account to blue chips, and from blue chips to NASDAQ, and so on. But you don't, like a lot of people don't want to invest into international or foreign, so outside of US financial markets, because those markets may be disturbed. And from a longer term perspective, I would say that Palantir has a pretty interesting price action pattern compared to the all-time highs a few years ago, because it is basically sitting on the same plateau back in 2021 during the period of uncertainty that eventually led to a bear market. But maybe this time, if it can stay there and to pierce through the $35 resistance level, then it's only going to be a matter of time before Palantir goes to 40, 45, and beyond. Palantir has always gathered a lot of attention from retail traders to look up to and for commentators to talk about. It does have a lot of retail shareholders and onlookers trying to get into the game. This could potentially be one of its potential weaknesses, because what it could potentially mean is that others are not really interested in holding Palantir for the long run. And by others, I mean institutional money. So this can be a sign that despite its solid business model and reliable revenue streams, Palantir may be perceived to be too expensive. And this increased presence of retails also explains why Palantir is known to be a very volatile equity. Ever since its debut in the secondary market, the sentiment has been overwhelmingly reactive, with investors eager to capitalize on all the trends and momentums, including the company's innovative data analytics and the wider tech sell-offs, as well as high interest rates on the way down. Of course, its journey has been, pretty confusing, and sometimes I would say that the front-running signs were there, but the price action follows an existing narrative or the shift of that narrative. One significant aspect of Palantir's price movement is the correlation between its fundamentals and the macroeconomic news cycles. Events like geopolitical uncertainties, supply chain issues for large economic sectors, the interest rate hikes, or the government regulations um, have significant impacts for the share price of companies like Palantir. So, on the other hand, the relevance of analyzing news, though, I would say that is limited, albeit quite interesting to look at. It's often observed that news surrounding the company closely reflect on the price action, which leads to a self-fulfilling prophecy. When the stock is on an upward trajectory, positive news tends to dominate the headlines, meaning it's so awesome because it's been going up. And then on the way down, it's going to fuel the exact same thing, but the other way around. So if it goes down, people are going to start to see headlines such as, can Palantir hold up? Is the company really relevant? So on and so forth. So this probably goes for most stocks, but more obvious in Palantir, in my opinion. So the news articles may be interesting to look at to confirm if you're looking at the right direction, if the direction that you're thinking it's blowing to is the right one. And as things currently stand now, Palantir has been able to maintain its bullish trend in the medium and long term, albeit with diminishing marginal increase and occasional pullbacks on the short term. The stock has shown its resilience in recent sessions, and the pace of its ascent certainly slows down over time. But one factor that could influence Palantir's future performance is going to be its market cap. It's a bit like a snowball. The bigger it is, the bigger it'll get. Because with the market capitalization, Palantir belongs to the big league. And large cap status often brings additional institutional interest and a broader investor base, something that Palantir absolutely needs. Despite its current bullish outlook, we should always be careful, and we're going to talk maybe a bit more about these in a second. But events that happened earlier this week kind of shows us that sometimes there are stuff that are outside of our control that may spread like wildfire and cause panic. In which case, sometimes it's going to cause real damage into our portfolio if you decide to cave into the fear factor. So in terms of financial performance, I would say that one of Palantir's strong suits is exactly that, but it's only enough to keep the stock above a certain baseline. So the stock has been through a period of massive sell-off back in 2022, and the rock bottom could very well be sub $10. With that being said, it's definitely something to keep an eye on, since Palantir's financial reports are known to be able to move the market over the years. But when I say move the market, it needs to have like a portion of it that's going to enhance the ongoing narrative more than just delivering numbers. So the key levels I tend to look at are the cash, the gross margins, and the growth. The cash levels will tell us if right now Palantir is going to be in trouble, if it's going to come to us begging for cash and dilute our equity ownership. The gross margin validates whether the business plan is a good one, and in that sense, it is. Palantir has had positive, gross margins for a while, and that for me was the first sign that it's only going to be a question of time before Palantir's price can go back to above $10. So remember, Palantir at some point was trading below 10. And I would say the pessimism reigned free back then. And the third one is the growth. We're not buying Palantir that is, we're buying the Palantir that could become. And to that end, I would say that growth is very important. And this could also be one of its potential weaknesses, as we're going to talk about later. But let's just say that in terms of growth, Palantir relies heavily on how much public sector contracts it can get. If it's good at it, then we're not going to worry. If it is, then we have a problem. And remember, for these kinds of things, it doesn't always depend on purely economic factors. Given its symbolic and size-related significance, investing into Palantir does have its own pros and cons, and these should be considerations that can influence your decision making. Something that has been going for Palantir is its growth potential. It's often considered, and rightfully so, as a leading player in the data analytics sector. And this is a field with a lot of promises for the future economy, because companies, businesses, and entities will rely more and more on data-driven insights to make their decisions. And companies like Palantir are very well positioned to capitalize on this ongoing trend. With its expertise in handling and analyzing large volumes of data, Palantir stands to benefit from the growing demand for data-centric solutions across various industries. Also, its own financial stability is a reassuring factor for investors. Unlike many tech startups that operate at a loss, Palantir has already established a revenue-generating business model, and this reduces the likelihood of share dilution through frequent fundraising rounds. In other words, we don't have to worry that Palantir is going to come back to us begging for money. Additionally, Palantir has demonstrated its capacity to capitalize on popular trends to generate significant amount of interest from the market. In other words, it knows how to read the crowd. This is very important for a stock if you want to have like volatilities, if you want to see its fortune being potentially changed. With that being said, obviously, it's not without its own risks and challenges. One potential concern for investors is the possibility for legal contingencies related to privacy and data ownership. As a company that deals with sensitive information, it may face a lot of legal scrutiny and challenges, not only from the prosecution, but also from the general public, which could affect adversely its operations, reputations, and the share price. Another issue is it's very reliant and dependent on the public sector numbers. Remember, public contracts are very sweet because you're almost guaranteed that you're going to be paid, and to many of us, it seems like their pockets are bottomless. But does it necessarily mean that? Well, it's kind of hard to say. All we know is that it's possible for government agencies and public sectors in general to switch vendors, not necessarily because the numbers don't make sense anymore, but because words don't make sense anymore or the opinions don't make sense anymore. So these should be some of the potential issues to take on. And the last one, of course, is going to be the shift in narrative. Remember, AI is popular now. Data analytics is relatively popular now. Does it mean that it's going to be popular forever? That is a very good question. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, in terms of my decision to buy Palantir or not, I would say that I was right the last time when I called the bottom. And right now, my feeling is Palantir is probably going to resume its trend after maybe after some additional pullbacks. That's not guaranteed, but I wouldn't be surprised. I mean, right now, the market is still in a state of shock, mostly because of the fear of ongoing or possible recessions in the US. So, because of this, we may see additional volatilities in the month to come. My personal opinion is that Palantir is a good company to hold. It's the sector it is in. It's going to be relevant and promising for the years and decades to come. So this is why you should be buying Palantir from like a long-term perspective. Now, in the short run, though, I would say that Palantir does need to require patience and discipline from buyers. If you want to go in now, it would be a decent entry point. However, keep it below 10% of your overall portfolio and buy it over the course of 6 to 8 months and a bit longer than that if possible.